Korea's top story today isn't just a housing story. It's a signal about who gets to build wealth. You now need roughly 1 billion won, about $664,000, just to buy into Seoul. Banks added 4.3 trillion won in mortgage lending last month, even as regulators moved to tighten the taps. The question underneath it all is the housing ladder being pulled up. It's Friday, July 10th. Let's get into one of Korea's top economic stories today. Korea's regulators spent June trying to cool household debt. KB, the country's largest lender, cut back mortgage lending in response. Other banks are now following, reshaping who can borrow and how much. Here's what the numbers show. Banks added 4.3 trillion won, about $2.85 billion, in mortgage lending in June. Roughly 1 billion won, about $664,000, is now the entry price for a Seoul apartment, out of reach for most first-time buyers. KB, the country's largest lender, has scaled back mortgage lending, squeezing borrowing room this quarter. Shinhan has halted new mortgage insurance sign-ups, closing one path to a bigger loan. Woori is weighing similar cuts, with more lenders expected to follow. The financial regulator will unveil additional measures late this month, tightening borrowing limits further. So what does this mean if you're watching where Korea's economy is heading? Earlier, we said this was a signal about who gets to build wealth. Tighter credit plus a 1 billion won entry price pushes ownership toward those who already hold assets, widening the gap the rules were meant to close. For anyone tracking Korea, the real story isn't June's loan figure. It's whether affordability becomes a structural fault line. That's today's AI Prism, Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.